Hi traders, it's Zoran Kresovic here again for a midweek update for a trade zone session. So earlier in the week on Monday, we've touched on number of indexes around the globe. So mainly spoke about the S&P 500, also discussed DAX 30, and locally here I've touched on Aussie 200 or ASX 200 as well. So how about we actually get stuck into it? First thing first, I always like to actually go through the economic calendar and see what's actually unfolded over the last couple of days, and then perhaps see where our trades are at this point in time. So in terms of the RBA minutes, yesterday there was an important one locally here for the Aussie dollar as well as the Australian economy, as well as Aussie index or equities. Quite an interesting one because the meeting notes came out and indicated the RBA was actually pretty much 50-50 in terms of putting rates on hold 2 weeks ago, or whether to actually increase 25 basis points. They did decide to actually lift the rates by 25 basis points. That obviously spooked the Aussie dollar moving upwards, and in the short run, Aussie index actually retraced and basically went downwards. Now, ever since then, obviously, Aussie index is up for the past 7 days. And back on that news yesterday, obviously what's happened is market is actually starting to factor in that whilst RBA mentioned there might be another 25 to 50 basis points interest rate rise over the coming months, it seems like that market is actually not convinced. So what's that saying is that perhaps we're at the peak in terms of the interest rates, and whilst there might be another 25 basis points at some time in the future, a market is kind of not pricing in that it could happen in the month of July. On the back of that, obviously indexes actually appreciated yesterday, and ASX 200 actually went upwards. Now I'll touch on that in a little while, but first thing before we actually go into that, on Thursday, which is actually tomorrow, we've got, actually, sorry, my apologies, tonight we've got Consumers Price Index out of Great Britain. And we've got retail sales also coming through from Canada. And then Thursday might be a big one because we got Fed Chair Powell testifying and talking about the economy and inflation. To round that off, obviously, Bank of England rate decision, previously 4.5. The pricing in another 25 basis points to lift that to 4.75. But not only that, the market is actually to some extent factoring potential surprise of 50 basis points. Now, obviously, that would most likely drive the pound upwards, and potentially equities would actually retrace because it would be considered as a risk of sentiment. So that's pretty much in terms of the week ahead. So not the biggest in terms of the news, but these two are quite important if you are trading pound, and also if you're trading index markets as well. So how about we actually move on to the next chart. So here what I've got is Volatility Index versus the S&P 500. This is an important one for the liquidity of the market and also for the volatility of the market. So as you can see, actually, we've broken through the major support level of around $15, and Volatility Index is actually depreciating or going downwards, and it looks like the next level of support is around that $11.50 to $12 mark. Now, if we go way back before the COVID actually started, and we can see that back in 2020, around January, that was the actual last time that volatility was actually so low and subdued. So it's been more than 3 years since we've actually seen these levels in the chart. So the question is, what does this mean for the overall market sentiment and the actual direction of the actual market itself? Well, let's just go into the next chart, and I'll talk a little bit more about it. So what that means is obviously generally indicates that because of the actually subdued moves and low volatility, is that there is obviously a stack of cash still sitting on the sidelines. Yeah, so a lot of smart money is actually out there sitting on the sidelines and actually would like to actually pick the direction or pick the right instruments to actually get started in the market and trading as well. Obviously, we've got China stimulus as well, so it looks like they will be buying more bonds or actually trying to ramp up their economy. That's another point that's important to note as well. And the last one is the Fed interest rate decision as well. So if you have a look at the equities at the moment, they're actually quite bullish all across the globe. So, S&P 500, DAX, ASX200, everything is super bullish, as we can see. And we are approximately just 8% from all-time highs. Now, considering where we were 6 months ago and 12 months ago, that's actually a very promising and bullish move. So S&P 500 is right now sitting at the approaching 4,500 level, and that's a quite significant resistance level. We've got a strong uptrend in play ever since the 13th of March. So we're looking at for the short term and medium term uptrend to actually continue. And we are looking at the 4,500 as a resistance level. If obviously ASX, as I mentioned on Monday, S&P 500, as I mentioned on Monday, was to break those levels, then there is absolutely no reason for equities or S&P to basically test that all-time high, which is at 4,813 level. Okay, now the reason for that is whilst Fed is actually talking and saying that there might be another 2 interest rate rises of 50 basis points, I think the equities market or smart money is actually brushing that off, and they're actually not so convinced, and they don't believe that there will be another 50 basis points. The reason for that is because the year-on-year consumer price index is actually coming off, and inflation is actually cooling off. So because the Fed is actually going to wait and basically have a dot plot approach on the data-dependent decisions on week-to-week basis, depending how the actual inflationary data comes out and what it indicates, market or equity market is actually kind of factoring in that there might be less than 50 basis points, or in fact, actually there might be 0 interest rates coming over the coming months. In that sense, it would be a risk on sentiment, and that would obviously mean that equities will likely to continue their upward march or upward trajectory. Now, in the short term, we could expect S&P 500 to come back and test the, as I mentioned on Monday, the uptrend line around 4,300 level. There would be a healthy pullback back, but any upside run further, we would most likely to actually continue and test the all-time high. Another note that I want to actually point out for those that are trading technical analysis is a potential inverted head and shoulder pattern. So if we go from these this all-time highs, and we go to this major trough, we go to the following peak, and then basically to this bottom here. And if we pick the next level, or the right shoulder, I should say, and then go to the bottom, what this could mean is that here we've got an inverted head and shoulders pattern. So this would be considered as a left shoulder. This would be considered as a left shoulder. This would be considered as a right shoulder, and this would be considered as a head. Inverted head and shoulder patterns generally indicates that market is reversing, it's bottomed out, and potentially they will continue to run 150 to 250% of that range. So if I was to apply the price extension tool here, okay, what it indicates to me right now on the chart, purely on the technical analysis, is 150 level is actually around 4,850 level mark, which is approximately where the all-time high is. How important is that? So a break above the 4,400 level would highly likely indicate to us that we are on the upside run, and that 150 percent range of the head and shoulders pattern would be most likely the next target. So we could potentially be looking another 8% and testing the all-time high. If we were to test all-time high, then I would also potentially be looking at the retracement level, because when hitting the all-time high, there is always supply, there is always sellers, and there's always short sellers trying to squeeze and basically pick those tops. Now, if that was the case, then I wouldn't be surprised to actually see a pullback up to that 4,500 as a support level, and retest of those levels just in case. So that's for the S&P 500. How about we actually go into the ASX 200 now? I'll just start off on weekly again, on weekly chart. If we have a look at the all-time high, that's around 7,600 level. We've discussed this on Monday, so the potential upside is actually only 2.8% from all-time highs where we are at the moment. The market has actually, in fact, somewhat retraced a little bit more, to be honest. So let's just have a look. We are right now 3.79%. My apologies. So that's where we are. We are nearly 3.8% of the all-time highs compared to S&P 500, which is 8%. Obviously, percentage-wise, we are way lower than S&P 500. In terms of the daily chart, something that I mentioned on Monday as well, and it looks like the actual playbook is pretty much working out nicely. We've said that 7,400 level is actually our first level of resistance. So the fact that we've had actually 7 upside days on ASX 200 indicated that we were highly likely to hit the 7,400 level. I did not expect actually for the price to continue and march to the all-time high unless we've had super risk on sentiment. But given the fact what's happened yesterday with the RBA minutes indicating that they were very 50-50 on raising the rates 2 weeks ago, which is obviously indicating to the market that in July, whilst market is actually factoring another 25 basis points, we might actually have the rates on hold, which would be super bullish for the equities, for Aussie equities. The market to somewhat is actually coming and retracing. I did mention as well on Monday that Fibonacci level of the upside run from the actual major low on 31st of May, I did say that 7,200 level is actually a level of support. So I would not be surprised to actually see ASX 200, that red candle, continue downwards and test that 50% of the Fibonacci level. If that was the case, obviously there is a blue box which indicates there is a demand in the market. So a lot of actually buyers are waiting around these levels to pick up at the cheaper level or cheaper prices. And reversal from those levels and another upside run, which could be supported by lower than expected CPI data or no rate rises here in AU, that would be bullish, and we could potentially take out the prior high here at 7,400 level mark and potentially go up and retest the all-time high. On the contrary, if we do see more rate rises, if the CPI data at 6.8%, which came out for the month of June or April, in fact, I should say, is beaten, and we see inflation kicking up nicely or going strongly above the consensus, then obviously RBA will have to intervene, which means they will likely rate rise. In that instance, we could see further downside on the ASX. However, ASX right now at this point in time, if we are looking at the short-term horizon over the next week or two, looks quite bullish. It indicates energy sector is actually picking up quite nicely as well. Material sector is actually picking up quite nicely as well. And technology sector is outperforming, just like in the S&P and NASDAQ. All that is based on the fact that obviously China is stimulating its economy, which would obviously benefit our economy here, given the fact that I mentioned on Monday, around 30% of Aussie exports are going to China. So that's pretty much on Aussie index. The last one that I've actually spoken and discussed on Monday was actually German DAX, which is German 30. DAX is obviously bouncing off from all-time highs. I'll start off on weekly chart. Generally speaking, what I find when I actually when a particular instrument is actually reaching all-time high, a lot of time there will be congestion around these levels, and there will be those guys that are actually try to pick the market tops and squeeze in few points to the downside. The similar would actually apply on the reversal when the market is bottoming out at the key support levels. What you'll find is actually there will be buyers that are actually trying to squeeze the price or actually take a few points out of that. So if we focus purely on the weekly chart here, what we can see is actually the current weekly bar is down, which is not a surprise to me. Absolutely not a surprise. In fact, actually, I would probably expect for DAX to actually bounce off a little bit more, especially given the fact that ECB has actually lifted 25 basis points a couple of weeks ago. European Central Bank is actually lagging. The terminal rate is around 3.85%, which is way below the rest of the global governments and banks. So what that indicates to me is that highly likely we might see more rate rises from the European Central Bank. So it's not a surprise to me that we are actually seeing sellers coming into play or profit taking from that all-time high. Now, the question is, how far can this drop before it actually potentially goes and tests the all-time high? Well, if you're purely focusing on that right now, the uptrend line here would be the next level of support. So we'd be probably looking for DAX to drop around 15,500. So I would not be surprised, or I would not panic if DAX was actually to continue that downward trajectory to those levels. However, if it doesn't break that 50% of the last major range, then the next level of support would be that 14,800 level. Anything below that would be considered probably as a bearish move, and it would mean that DAX is likely to go downwards. As I mentioned on Monday, the upside run break above the all-time high would be 17,100 or 17,000 level, and that's approximately 4.75% to the actual upside. So consolidation around these levels, better sellers coming through is not necessarily a bad thing if you're a bullish on DAX, because a break or retest those all-time highs and break above that would mean that we would be marching towards that $17,000 level. So all in all, DAX has actually been performing really, really well. I mentioned that on Monday. Back from October 2022, we've got approximately 9-month uptrend in play. So that's actually quite bullish and quite strong. And we are looking forward to seeing whether you can actually break that upside of 16,433 level, which is the next or last week's major upward bar or bullish bar. I'll just zoom into the daily chart right now as well. And as we can see, a bit of sellers coming in, but also short-term demand is at these levels here where the blue box is as well. So that's pretty much it, guys, from me this week. Obviously, as I mentioned previously, equity is looking bullish. US dollar is actually somewhat retracing and consolidating, and looks like that pound is the big talking point as well, because obviously we've got the interest rate decision from or Bank of England projecting another 25 basis points later tonight. Hope you enjoyed this session. I wish you all the best, happy trading, and we shall chat soon. Take care.